Hello, ladies and gentlemen. This is Greg Michaelowski, and this is a Forex market update for FX Street, focusing on the euro versus US dollar. Well, things are the news is very liquid. Let's not, I'm not saying that the market is very liquid, but the news is certainly very liquid as far as the EU goes. Strauss-Kahn, Trichet, German finance ministers, German government officials, all are speaking at the same time, trying to allay the fears of the market. What we've found is that the aid package is not just 1 year; it's now 3 years, be 100 to 120 billion. These are numbers that are similar to what Goldman Sachs was talking about yesterday, and they seem to be coming out of thin air, if you will. It seems like every week we do have a different aid package, but we still have the same problems. And that problem is that the EU's member states and parliaments have to vote on it. In particular, the German parliament, and painting them into a corner, saying, "Hurry up, hurry up, hurry up! This has to be done." And by the way, we do have a bond that is coming due in mid-May, or a little after mid-May. If that defaults, we're going to have all sorts of other issues. Is a difficult thing to push on the German Parliament, and this story may not be over just yet. What we are seeing in the euro is that even though you do have a lot of volatility in the market, what I find that you can rely on is technicals. But what I mean by that is that there are certain levels in the market that the market will follow, and those levels become levels that the traders can trade against. For example, this 132 to 60 to 68 level, which I talked about in our morning commentary on FX Street, was a key upside resistance. Why? If you take your cursor and go from left to right, you can see that yesterday we had a high that came in at 63. This came in after the sharp sell-off came up to 63 into our area. You move further to the left and you see we have this double bottom here off this hourly chart. It's chart at 68. You keep on moving to the left, and you can see how the market use the level as a springboard. Right there, we use the level as a level to cause a sharp downturn here. And then you go back to this point right here, and this low was 132.60. Left a big, huge tail here, a rejection of that level. You can go back in time, and you can see what the importance of that 132.60 to 68 level is, and that's what I base my decisions on. So the market, when the market gets up toward this level, no matter what the news is, you will tend to find your sellers against that level. Why? Because if you sell against the 68 and the level goes above the 68, then you stop yourself out, or you go long and you look for the next target, which would be the 100-hour moving average in my analysis, or this 90 level, this 90 to the 100-hour moving average. They basically come within 8 to 10 pips of each other, between 90 and the 100-hour moving average. So that's how traders trade the market, and that's why you can rely on technical analysis to give you your clues. Now, the other level of importance here today is a 132.17 level, and you can see how that was a ceiling here. It was a floor here. It was somewhat of a floor here. Note that during this period right here, the market didn't really have any closes below that line right there, and so it became a key, even more important level. So the market, when it broke through the 17 level here, we're having a difficult time getting back through it. Other key level is 132, and if we go to the 5-minute chart, I can show you where I'm really looking for support, and support is being tested currently at the moment at this period right here, where the 100 and the 200 bar moving average on the 5-minute chart currently comes in. So if we break through below this 131.93 92 level, where we're currently trading at right now, we should see further liquidation in the euro versus the US dollar. Where is resistance? Back up against this 132.11 to 17 level. You can see, going back on the 5-minute chart, how that level is so important here. All these different lows and highs that come in at that level. That was a level that we were looking at going into today, and it's a level that we're still looking at as we trade today. So this is the Forex commentary brought to you by FXDD for FX Street. We hope you learned from it. If you have any questions, you can always send me an email at greg@fxdd.com. That's greg@fxdd.com.